Hello class, welcome to my video. This video is chapter 6 for your financial accounting 2. So chapter 6 is discussing about incomplete record and internal control. So what you can learn from in this chapter, upon completion of this chapter, candidates should be able to deal with incomplete information in accounting, preparation and understanding the nature and needs for internal control in accounting. So accountant may face the issue of incomplete records or information during the preparation of financial statement. In this chapter, you will learn the solution available to accountant in finding out incomplete information in the preparation of account. So the first solution that you can use is using the trading account. Trading account is the first part in your income statement, basically the information before gross profit. Here are the formulas that can help you to identify the missing accounting information. For example, revenue minus cost of sales, we get gross profit, right? And then the combination of cost of sales is using opening inventory plus purchase and minus cost of closing inventory. So meaning that by using your trading account, you can identify any missing information in your revenue, cost of sales, or either gross profit. So let's look at classroom exercise 6.1. We use whiteboard to present our answer, which is more easy and more clear, right? 6.1. The following are the information of TCP Limited for the year ended 31st December 2018. Please calculate the total purchase during the year. So we are given the information of revenue, closing inventory, opening inventory, closing inventory, and gross profit. So we do it in this way. So we know revenue minus COGS, we get gross profit. So revenue is 180,000. COGS we don't know. We know that the gross profit is 38,000. So from here, we using the difference in the amount, we can get the COGS amount. So your COGS is referred to 180,000 minus 38,000, so it's 142. We know that the formula of COGS is using opening inventory plus purchase less closing inventory. We have COGS amount, which is 142. Opening inventory value 34. Purchase we don't know, so we put a P first. Closing inventory is 45. So purchase equals to your 142 minus 34,000 and add 45,000. Answer minus 34,000 plus 45,000. So the total purchase during the year 153,000. So this is using the trading account to get the missing information, which is your purchase. Let's try another one. Classroom exercise 6.2. LKY Limited records revenue 320,000 in the financial year 31st December 2018. The company makes a gross profit of 78,000 during the year. Based on the trial balance, it shows that the opening inventory and purchase during the year is 58,000 and 245,000 respectively. Please calculate the closing inventory value as at 31st December 2018. So similarly, we draw a simple trading account. We have revenue, COGS, and gross profit. Revenue 320, gross profit 78. So from here we know that the COGS will be 320 minus 78. So we get 242. 242 for the COGS. And applying the formula, COGS equals to your opening inventory at purchase minus closing inventory. We have the information of COGS which is 242. Opening inventory, we have 58,000. Purchase 245. Closing inventory, we don't know, so we put closing inventory here. And the closing inventory, how to get? So your closing inventory will equals to 58,000 plus 245 minus 242. $58,000 plus 245 minus 242. So your answer 61,000. The value of your closing inventory 61,000. Next, classroom exercise 6.3. Using the following information, please calculate the revenue of the company during the year. So similarly, we have revenue, we have COGS, we have gross profit. Gross profit is 190,000. COGS, we use the formula here. COGS equals to your opening inventory plus purchase plus closing inventory. So opening is 120, purchase 375, closing inventory is 129. So minus. Use the calculator here. 120 plus 375 minus 129. 366. So 366 will be the COGS. So we apply 366 here. How to get your revenue? We use gross profit add COGS to get the revenue. So we get 556. So this will be the answer. And this is the answer for your exercise 6.2, and this is the answer for 6.1. So this is how we use trading account to find out the missing information in our accounting system. Next, the second solution available to you. The second solution available to you is using margin and markup concept. So what is margin? What is markup? Margin means that your gross profit is based on the selling price. It refers to the 100% of the selling price. And for markup, it refers that the gross profit is based on the cost of goods sold. And it can also say that cost of goods sold is 100%. What is your formula for margin? Margin equals to your selling price times the percentage. Markup is based on cost of goods sold. So let's try this exercise 6.4 and 6.5 to understand how to use the margin and markup concept to identify the missing information. KYK Limited total revenue is 480,000 during the year 31st December 2020. The profit is based on 25% of the margin. Please calculate the total cost of goods sold and the gross profit during the year. So let's have a look. So this is classroom exercise 6.4. So we know the combination of your trading account is start from revenue, COGS, and gross profit. So from the scenario, what information we know? We know the revenue, which is 480,000. So 480,000. And it say that profit is based on 25% of the margin. So profit is 25% on the margin. Margin refer to what? Refer to the revenue is 100%. Look at the textbook. Margin refer that the selling price is 100%. Selling price revenue is 100%. So based on this, we can identify the missing information. Gross profit is 25% of the revenue. So you use 480,000 times 0.25. You get 120,000. And the difference between your revenue and gross COGS will be the difference between your revenue and gross profit will be your cost of goods sold. So we use 480 minus 120, then we get 360. And 360 also represent the 75% of the revenue. So this is the answer. COGS 360, gross profit 120. Next example, classroom exercise 6.5. SCK Limited total revenue is 480,000 during the year 31st December 2020. The profit is 25% based on markup. Please calculate the total cost of goods sold and gross profit during the year. So if you compare to 6.5, you can see that all the information are the same, even the profit. Just that the difference is one is based on margin, one is based on markup. So this exercise 6.5, we are looking at markup. So back to the solution 2 here. Markup refer that gross profit is based on cost of goods sold. So we do a similar table. So this is classroom exercise 6.5. We have revenue, we have cost of goods sold, we have gross profit. So the known figure is revenue, which is 480,000. We know that gross profit is 25% on the cost. And if this is markup, it says that your cost of goods sold will be 100%. So we make 100% here. So we get the percentage first. What is the percentage of revenue minus the cost of goods sold percentage to get a 25%? The answer is 125. You use 125% minus 100%, you get 25%. So when you have this information, I think this is more easy for you to calculate the difference. So we start from the revenue. Revenue is 480,000, right? 480,000. And this 480,000 represent 125%. So how to get 100%? You divide. You use the divide here. You divide 125%. So your answer is 384. To get your gross profit, you have two methods to get. You can use a simple way. You use 480 minus 284, so you can get the gross profit, or you use the 284 times 25%. So we use the simple way first. 480 minus 384. So we get gross profit 96,000. We can also check whether this answer is correct or not. So we use 384 times 25%. If you can get the same answer here, it means that your answer is correct. So the cost of goods sold is 384 and 96,000 if the markup is 25%. So from this comparison, what you can understand, we can know that margin provide higher profit. Let's say the percentage is the same. Let's say 25%. For margin, the gross profit is 120,000, but for markup it's only 96,000. Why? Because margin is based on revenue. Revenue normally higher than your cost of goods sold because you want to earn money. Your revenue must set higher than your cost of goods sold. That's why if your profit is based on revenue, you can get a higher profit. And for the rest of the question, I have given you the answer. You can try to calculate whether you can apply the concept in the exercise 6.4 or 6.5. So that's all for our first video in your chapter 6. So I will discuss the solution 3 to you in the next video. Thanks for watching.